Welcome back. HDFC Bank at the high point of trade and the market's picking some pace right now. Important news from the bottom of your screens. Reuters says that JLR has restarted manufacturing and introduced some new products. In fact, the phase-wise manufacturing for their plants will start from October 8th, which is starting tomorrow. Phased restart of Jaguar Land Rover manufacturing operations at EPMC, both in West Midland, UK, on October 8th begins. So that should be positive, though currently the stock lower in today's trading session. But we have a bunch of IPOs, 3 this week itself, and Canara HSBC Life Insurance's near 2,500 crore rupee IPO opens towards the end of this week for subscription on October 10th. The price band between 100 and 106 rupees. Yash caught up with Anuj Mathur, who's the MD and CEO of the company, and started speaking about the IPO and the prospects of the business going forward.
It is an OFS, and see, now we are in our 18th year of business. The company has matured. We are doing very well in terms of all financial metrics. So I think this is the right time to have wider participation, and I think shareholders have decided to kind of go for wider participation. It's always good. Yeah.
Correct. Now, just to have some clarity in terms of shareholder pre and post IPO.
Yeah.
Which are the shareholders who would be tendering in their shares through the IPO? How much? And what would the post-IPO shareholding look like?
Right. So in this, it's about 25% of the company's capital, which is available for the investors. Canara Bank currently is at 51%. They are diluting 14.5%. So with that, their stake will come down to 36.5%. Punjab National Bank, currently they're holding 23%. They are diluting 10%. So their shareholding will come down to 13%. And HSBC is having 26%. They are diluting only 0.5%. So it comes down to 25.5%. Both Canara and HSBC, they are the promoters. And Punjab National Bank is investor in the company.
Okay.
So this is how the shareholding will be post-listing.
Okay. Now, one question in terms of the valuation comparison itself, right? On one hand, in the sector, in the listed space, we have LIC, which trades at about 0.6, 0.65 times forward price to embedded value. On the other hand, we have private players like HDFC Life, Max Financial Services, who trade anywhere between about 3 to 4, 3.5, 3.8 times forward price to embedded value. For you, where do you value yourself with this IPO? And the rationale, what was the thinking behind it?
So first of all, the valuation will appear after listing. But this process which we ran for last few weeks, through the big book building process, the price band has been arrived at. So that's something which we think is a fair value. And I think the valuation will be after listing.
Correct. But I mean, the IPO valuation itself, after listing, of course, the market will assign a valuation to the company. But with the price band and the embedded value, the last declared embedded value that you have, what is the valuation right now?
So again, it's there in the offer document. Our embedded value as of 30th of June 2025 is around 6,350 crores. So basis that, the price band has been arrived at, and basis the demand. So that's
okay. Okay. Now, let me understand the product mix a little between ULIP, endowment, term. What is the product mix that you have? And importantly, that product mix, a result of that, what is the VNB margin that you're deriving?
Right. So Yash, as a company, we have been more of traditional, selling more of traditional products. That's because of our customer profile. Last year was an aberration, wherein the markets actually were delivering very good returns. So I think there was demand which came for unit linked, and we saw across the industry that the demand for unit linked went up. So last year, I'll say, was more of an aberration. If I look at our UL composition, it went above 50%.
Correct.
But typically in the past, our traditional products have been in the range of 55 to 60%.
Okay.
And I think that is what I'll say as the ideal state for us, because looking
traditional
at
55 to 60%, and ULIP and term, how much?
So ULIP, because again there is a demand, I think our ULIP should be in the range of about 45% or so.
Okay.
And term portfolio we expect, in fact there are 2 areas where we see good growth coming in. One is pure protection, and the GST is going to help there a lot. The other is the retirement segment, where again we see good demand coming in for retirement products, and that's where we feel the growth will come from. And these are typically traditional products.
Okay. You said, of course, last year, the ULIP segment, the demand was much higher. The share went above 50%. The first 6 months of FY26? What has been the share? Has it come down from that higher than 50% to what point?
Yes, it has come down, and you will see that in the public data, which will be visible now once the numbers are published by the industry council. So yes, there is a decline.
Okay. Now let's speak about the growth as well as margins. Last year, what is the kind of growth that you've been doing over the last 3 to 5 years in terms of premiums? How have the margins trended for you, and where do they stand as per the latest disclosure? And what is, do you see further improvement happening in margins from here?
Yeah, so first of all, as far as overall product mix is concerned, we talked about that. So I feel that margins are current, if I talk about the past, the last 3 years, if I talk about the growth first, so our growth has been in the range of about 17%.
Okay.
This I'm talking about WPI, compounded annualized growth rate. So we have been growing by around 17%, whereas if you look at the industry has grown in the range of about 10 to 11%.
Correct.
Yeah. So that is in terms of growth. So as a business, we are doing very well. The bank insurance model which we have is very, very superior model where you have access to the customers and you are able to price products very, very competitively. You are able to offer products to the customers. So we have seen good growth in terms of our premium income. When it comes to margin, and margin is also, VNB margin is also a factor of the vintage.
Correct.
For how long the company has been in existence. So we started our business in 2008, June 2008, 17 years. And if I talk about our margins, in FY24, our VNB margin was 20%.
Okay.
In FY25, slight change because of the UL mix, it was around 19%. And recently also, we have seen our VNB margin is in that range.
Okay.
So that's how it is.